Hey everybody, welcome back. GameStop just released its latest earnings report. Not only did they defy expectations, but they also dropped a special dividend announcement that could potentially be pretty big. So we're going to be breaking down the numbers, looking at how the dividend stacks up against recent plays that we've seen in the market. If you follow my daily trading recaps, NBY, SOGP, UUUU, all in the recent weeks, announcing a special dividend, going on massive runs. So we're going to do a little bit of a breakdown there. We'll be comparing GameStop earnings to Hasbro, discussing a little bit about the tariffs and their effects on our beloved company, and then price action, what happened, looking at the options chain, and discussing what could potentially unfold into the future. So thank you for joining me. Leave a like, drop a comment, subscribe to the channel, all that jazz, and let's get right into it. So the earnings recap to start things off. We have a reported 25 here, which I don't think is correct because I'm fairly certain that I read that we had a diluted, basic 38 and a diluted 31. So seeing 25 here is interesting. What do you do though? Either way, it's a massive beat because we were at 16. They raised guidance to 19. We come in with what you're saying is 25 trading view, but I have on a good word from GameStop that it's actually 31 and a basic 38, which is pretty cool. So that's a massive jump from just the year earlier, right? So crazy. Our gross profit, 283 million. Operating income in at 66 million, nearly tripling year over year, which is pretty impressive. And here's the kicker, right? So SG&A expenses were down year over year, which is what we're expecting. We kind of talked about that yesterday, right? Showing that we're getting leaner and more efficient while simultaneously growing our revenue streams, which is awesome. And that's why we see margins look so much stronger than they did just 1 year ago. Aside from that, no forward guidance. That's kind of a bit of the pullback. We got a single tweet. Not bad for a shitty retailer or something. Ryan being Ryan. If we got forward guidance, that would have been amazing. I'm sure we'd already be at 30, but it is what it is. Wall Street wants the guy to talk. They want to hear the plan, and that's going to give them confidence. And maybe it's something that we do see in the future. We did get that special dividend announcement as well. So on top of earnings, we're getting a warrant for shareholders on record of October 3rd, right? So make sure that you own all your shares by October 3rd, probably the 2nd, and earlier than that might even be better because I imagine that this is going to supply additional buy pressure, right? And talking about how that will affect us a little bit later on when we talk about our price action. So for every 10 shares you own, you're going to get one warrant. And this warrant will expire in October 2026, and it is for $32, right? So you can trade the warrant. It'll have its own ticker name, of course. Trading, I think, on like the 7th or something, which is awesome. So you could sell that for cash if you wanted. I probably don't recommend that unless it's super duper squeezing. And then you can, if you want, exercise it. So it's going to cost you $30, $32 per warrant, and then you'll get that in shares, which is pretty decent. And potentially, this is at a discount. So say we're trading at 42, you just got the right to buy the stock at 32, which is nice. And you're not obligated to do this by any means. You could just sell the warrant, right, straight up. So you can own the warrant, which allows you to buy the stock with no downside, right? Which is pretty nice. And they're going to give that away to everybody, which is interesting. Something I did not expect. But when we think back to our daily trade recap videos, these things need to be reported to the SEC weeks ahead of time for approval. And then, it's telegraphed through inner circles. Don't kid yourself. And just like when GameStop was buying Bitcoin, all of these companies come out of the woodwork and they're like, yeah, we're doing that. before GameStop, right? They beat them to it. And same thing goes here. So it gives us a little bit of a reference point as to what this can do, which is pretty interesting. So, yeah, details still coming out for this. I'm sure we'll learn more as it unfolds. As far as what the price of these warrants will be listed at to begin with, I'm not entirely certain. We could potentially compare it to a call option, right? Because they're good until 2026 of October, which is next year, right? So there's quite a bit of time on them, and layering this with the unwinding of the bond arbitrage, if we get up to that 37 trigger point, it could be additional fire to a bigger move. And now, with that being said, before we get into the comparison of these other stocks, we'll save it for later. Let's take a look at these stocks. UUU is doing about 140%, right? Special dividends, there we go. Blast up, a little bit of a multi-day run, kind of coming down now a little bit, which you would expect after a 138% move. So just off the top, NBY as well, doing a crazy multi-day squeeze, 535% here. Actually, I guess a little bit more, about 600%. It looks to be so. An absolute massive move with similar news. This is a special dividend. And then SOGP was the third example. And these are all things that we traded in our daily trading sessions, which is pretty cool. Doing the recaps daily for you here on the channel. SOGP, 530% as well, which is really, really impressive. So, if GameStop can do a fraction of this, it'll be really nice because we have all of these calls at 25, right? We get those in the money, and I don't think they were hedged pre-earnings. Now we get this big boost, which is great, but we're still kind of right on that 24 mark. But they're going to start hedging these 25s because the delta's higher, and we get the dividend news, which is going to drive buy pressure into October 3rd. So, that should hopefully be the catalyst to swing us above 25, at which point, all these 25s are fully hedged, which should propel us up to 30, and that's going to fill the gap. Where we go from there, I don't necessarily know, right? I don't think we get more bonds. I think with the dividend, that's a way of doing bonds for the shareholder in a way, right? Which is nice. So not necessarily just rewarding institutional investors, right? But the little guy as well. Furthermore, on that note, they're doing 10 shares per warrant. Could have easily done 100, right? And who can't afford 10 shares for a lotto ticket, right? On that note, we see 57 million warrants being issued. Isn't that a little high? Shouldn't there only be 300 million shares? And then post-dilution, 420 million shares. And then post-warrant dilution, if all exercised, like 470 some million. 480 almost. So where's the extra 90 million shares come from? Because, 10 shares per warrant, 57 million warrants, 570 million shares. Isn't that a few too many shares? Furthermore, where'd they get the count from? They didn't do a share recall. Computer share? And there's no way. So you're telling me that computer share has 570 million GameStop shares? Isn't that interesting? I don't know. It's curious. I can't necessarily give you an answer, something that I'm thinking about, right? I just think 570 is too much. So we'll see how that all plays out. Moving on. So, you want to buy GameStop by the third in stacks of 10, right? Make sure you round up. And then, these other plays are a little bit different than GameStop. However, it does make a good base comparison. With that being said, on the 4 hours, we, for the first time, have cleared our 200-day exponential moving average with a break of structure post-market structure shift, right? So here's our bottom, and now we're confirming a leg up, right? Which is pretty decent. A big level that we couldn't break before, right? Acting as resistance literally from the drop. Also, we have now basically invalidated or potentially invalidated our accumulation zone, which is our manipulation leg, no longer valid, and that's good to see. It's nice to get, would lead to a run, but maybe we don't need it. Maybe it's just too strong and they can't do it. Or maybe it's manipulating up before it distributes down. Oh, I don't know. Could be. We'll have to wait and see, right? It's all part of the game. Adding to that, though, because some things are bullish, some things are bearish. You got to look at them all. We're into the gap, right? We are into the daily gap, which is resistance. We break through. We want to turn it now into support. So if we do go down, we want to base on the lower band of the 1-day gap, and head for that consequent encroachment. Head for the upper band, maybe break it and go to the next gap, which does exist as well. So great earnings. Our intraday price action was not really there. Like, it dumped down. It's like, what is this? A pre-earnings rundown? Which was in itself a little suspect and a bit telegraphed when we're so used to an earnings run up. Run it up. Everybody's selling covered calls, going crazy, right? But we didn't get that this time, right? So we'll see. We did load up on options earlier in the week. We did a couple recommendations. Interested to see what those open up in the morning. If you happen to hold any, specifically if they're weeklies, think about taking some profits. At least scale out, protect your position. You won. Take a win on the weeklies. You can buy back in on the dip with something that has a little bit more time. And we're going to be looking at those contracts as well, because I'm in this same boat. I got some weeklies that I'm very much looking forward to unload tomorrow, the next day. Maybe we'll hold some of them right till Friday, but we're going to be scaling out, locking some profits, reducing our risk, so we can come back again and again and again. And that's the name of the game, right? It's compounding all of this. On the 1 day, it's going to be similar to the 4 hour, where we are now breaking out here. We're challenging this bearish order block, which does coincide with the lower band here. So, breaking through that, hopefully now we can retest it on the downside, confirm it as what will now be a bullish breaker block off of a bullish order block here. So things looking good, right? We have our market structure shift here on the 1 day as well, and now just maybe form a couple break of structures on our way up, retest, and fill that gap. We want to be filling this gap. Not too much there. Talking a little bit about GameStop versus Hasbro now, right? So zooming out to the collectible markets, tariffs are hammering toys and collectible makers like Hasbro. Now, there's a bit of a difference here between Hasbro and GameStop, and that is the manufacturing side of things, right? So Hasbro is basically a toy manufacturer, and GameStop's like a reseller, right? So Hasbro is down about 1,800% on their collectibles. I think making like 40 million last year, and then this year they're down $1 billion, which is massive. Like, that is not good. And this is due to tariffs, right? They have a 1.07 billion operating loss, which is not good, right? So GameStop is not really suffering from that, right? We see collectibles surge by 63% year over year, which is nice, contributing to profits. And so it's a little bit different, and it comes down to the tariffs and who's really paying them, right? So Hasbro has to pay that at the border, and then GameStop is negotiating with them in bulk, basically, right? And they're not brunting the full force of that tariff. The manufacturer is eating a lot of that, and then what GameStop does have to take, they're just going to pass off to the consumer. Whereas Hasbro doesn't have someone to necessarily bully that onto, other than the resellers like GameStop, which are at a better position to negotiate than just the solo consumer, right? Obviously. So the tariff, I was a little bit worried about for GameStop, because you see Hasbro down so much. They're getting hammered. And, I was a little bit worried for GameStop discussing that. It looks like they're bypassing it for the most part, which is awesome. And just coming down to the fact that they're not actually the manufacturer, and then able to pass that off where the manufacturer can. So just some supply chain specifics there that I found interesting that could add context, because the two companies are similar, right? They're selling toys and games, I guess. A little bit different on the supply chain side, though, right? Where one is a manufacturer, the other is a reseller. So where they seem similar, they're actually different. But what you would expect to affect one to roll down into the other hasn't, which is just interesting, right? So just trying to stay aware of all things. Daily price action, not really happening too much here. Looking at the 1 day a little bit more. Reclaiming the 50 moving average, right? So on the 4 hour, it was the 200. On the 1 day, it's the 50, which is going to allow our reversal signal to set, right? So, when we get our 21 crossing the 50, that is confirmation of a bullish run, right? We see that over here. Here's our reversal. Here's our bullish run. Here's our reversal. Here's our bullish run. Here's our bearish reversal. Here's the sell-off. Here's the bearish reversal. Here's the sell-off, right? Simple stuff. Keeping it basic, right? Don't make me get the bananagrams. But we want these to reverse, and we'll go on a run. We want to pair that with a key level breakout. That's going to be the reclaim of the 200 on the 1 day, which looks like we just did. So the longer the price stays above this, the faster these EMAs will reverse. They'll set the confirmation, and then, like I said, we can go fill that gap, hopefully, and maybe even move on from there. I don't know. We're going to have to take it day by day. The options change. So looking at that, anyways, we have heavy call volume stacked at 25 to 30 across multiple dates, which makes it a little bit stronger, right? So it's not like, oh, you just pin it at 24.50 for this week, and then you can bleed us down next week back to 22 because all the support is gone. Because that support stays there for multiple weeks and isn't just at 25, because a lot of that is rooted in the money on those leaps. So we've been looking at this, every day. We're not going to go too deep into the specifics, but just as a little bit recap here. So the 12th, a lot of 25s and 30s. The 19th, we have a lot of 23 to 25s. Which could act as magnets, right? But with the catalyst, I think a lot of this was not necessarily fully hedged. We're above it now. That's got to be hedged, which is additional pressure on the market. Plus, we get the dividend, which is more buy pressure, which could be exactly what we need, right? So September 26th, basically everything at 26, which is nice. It's not really a busy month, but someone went in big on the 26th, helping us walk up maybe, right? And October 17th is the big one, because this is post record date, and it's post trade date of the new warrants. And bigger money further out, we see spikes 29, 30, and even some at 50, which is quite interesting. Good for you. And then the leaps, right? Massive open interest at 120, but those are pure Vega Lottos. But a lot of in the money too, right? So we just pull that up, look at it as well. If you're ever interested, we just use Chart Exchange, and then your volume for the day, and then your open interest is like your total. You see a lot at 20. Like this is 30,000 at 25, 40,000. Those are in the money now. And if we get above 30, it's a really good ramp really far out, which is awesome and going to provide us with long-term support. And that's what we wanted, to get above these strikes, which were kind of acting as resistance, convert them into support, which is the name of the game, right? So, just to recap, October, seen a lot of these pour in today, which you guys are going to be laughing. Good for you. Those are nice buys. The 20s are here, 25s looking pretty good. If we get those in the money, I think a lot of these are previously unhedged. They had low delta. They're going to have high delta tomorrow. And, that could push us into 30. And then if, the additional buy pressure from not only the hedging, but the new special dividend can get us above that, then we repeat and maybe reach up to 35. Oh, wouldn't that be fun, right? So, that's kind of what we have going on here. The weeklies, man, you got to sell these first thing in the morning. And so that's what we should talk about is if you do hold weeklies, you might want to protect yourself right at open, scale out, and then you can buy back because we got good earnings. You got the move you needed, but now you need to protect the position because theta decay is still a thing, right? You could still suffer IV crush because everyone's going to be doing this, and that's what makes it. So you best participate in it early, LOL, if you want. If not, just watch. That's fine. Take the sell, take the win, and you can buy back the nominal amount, the same amount if you want, at a better date. You can take some October 17s now instead of ride or die 25s on the weekly. By all means, leave a couple lottos, leave 1 or 2 contracts if you want, but make sure to lock some profits. And you can buy those back literally as early as, mid-morning, the afternoon, and probably almost guaranteed to get a discount on them because as everybody takes profit, the open interest falls, which is the hedge specifically on the week, and now they can walk it down. We do have a lot of bullish confluence here, so maybe things just get repriced up and we go from there. But if post earning plays have taught me anything, not only with GameStop but all, is that there's going to be a lot of people taking profits, and as one should. And when they take profits, we get a retracement in price. At which point, you can load back in if you have high conviction in the play, as I do, and maybe get something a little bit more further dated out to protect yourself from any theta decay. Because it's Tuesday, tomorrow's Wednesday, midweek. All you need to do is trade sideways, right? And what's stopping that from happening? We just have done it for 3 months. Why couldn't we do it for 2 more days? With that being said, I think the special dividend shows that Ryan is willing to reinvest in his shareholder base, which is nice. I think that sometimes CEOs may do something, a corporate action as this, for the optics, right? They just want the press release, and that press release drives volume, and then, they're selling shares, they're doing their thing, right? But I don't necessarily get that vibe from Ryan. It seems like a pretty healthy dividend, all in all. And I think that it shows that he's willing to give back and will most likely continue to do so in the future now that GameStop is profitable as such. So cheers, everyone. Thank you so much for hanging out with me the last week or two when we've been doing these dedicated GameStop videos. We're going to continue. We're going to ride this into the sunset as long as we can. And what a fantastic start to the whole shebang. So the options show a clear gamma ramp if GameStop pushes above 25. As I mentioned, we get the hedging, pushes us to 30. But like I said, the market makers might try to pin it in the short term, right? And just kind of bleed a little bit off of the chain, because there's a lot there in the money now that wasn't in the money yesterday, right? But if the price breaks higher, the option chain could fuel an even stronger move, specifically as we have those buy-inducing catalysts with the dividend. So with that being said, to wrap it all up, GameStop just delivered a profitable quarter and with real efficiency gains, announcing special warrant dividend that could potentially set off some fireworks, if not just continue to drive both shareholder and company value, which is nice. And if it continues to outperform traditional toy giants like Hasbro, who are getting crushed by tariffs, the daily chart looks pretty bullish. And if the options chain continues to hold, it's loaded with potential setups. So, as always, let me know in the comments what you think about the dividend and if this is the spark that could potentially ignite the next big run. Don't forget to leave a like, subscribe to the channel, and I'll catch you on the flip side. Take care.